What up? What up? Today we're going to talk about something interesting. Let's talk about how much money you actually need in order to retire. Now, the magic number used to be what? A mil? That was decades ago. Now, I found something interesting online. Let me go ahead and share my screen. This one. So on CNBC, I found this article headlining Americans believe it takes 2.2 million to be wealthy. Here's how much you need to invest to get there. And then they break it down into different time frames. If you're investing for 10 years, 20 years, 30, 40, 50. Now, 2.2 mil, is that wealthy? I wouldn't consider that wealthy, but you're pretty much on the right path if you got 2.2. Honestly, if you got 1 mil invested, you're already heads and tails above a lot of people that are not even investing. So, drilling down into the article, so and I do agree with this one. So there is power in starting early, and it's important to keep the end in mind when teaching children how to invest. The earlier you start investing, the more time you have on your side. And the earlier you start investing, you don't need to invest a lot of money in order to let your money compound and grow. Also, when you start investing early, you can still make mistakes and bounce back. Now, going down even further, so, a recent Charles Schwab Modern Wealth survey found that Americans now believe they need to have an average net worth of 2.2 million in order to be considered wealthy. Now, this is an increase from 1.9 million in 2021. But if I scroll down, so what people believed in the past is that if you have a 1.25 million investment, and if you apply the 4% rule, which means pretty much every year you live off 4% of your investment. In this case, they're shooting for 50K a year. Now, 50K, that might sound good now, but let's say 20 years from now, 30 years from now, 50K might not do it because even look at now, inflation is sky high. So that's 50K a year. That sounds good now, but 20 years from now, it probably needs to be 70 or 80K. So they break it down, which is so let's say you want to get that 2.2 million. How long will it need? How long will you have to invest? So you can choose. They're pretty much picking 10, 20, 30, 40, 50. And how much money do you need to invest on a monthly basis in order to hit that 2.2 mil? They also go into their net worth. So keep in mind your net worth is defined as the total assets that you own. So the cash you got in your bank accounts, investments, retirement accounts, etc., as well as the value of any real estate, minus the total liabilities that you own. Debt, including student loans, credit card, mortgage, etc. I would also add like car loan in there because a lot of people also have their car loans that they got to pay off. Once you hit that 2.2 million portfolio mark, your true net worth will depend more on what your liabilities are. So once you hit that 2.2 mil, you still got to take off your liabilities from that. So let's go into how much, according to this article, you have to invest. Now, I'm a dividend investor, so I look at this a little bit different, but let's see what this article is talking about. So here's how much you need to invest to be considered wealthy on that 2.2 mil. And so they break it down in those different years. Let's pick on. I'm gonna verify this. So according to them, you need to invest a little over 1,800 a month each month for 30 years to reach 2.2 mil at a an average of 7%. So they're actually taking 10%, but they're adjusting for inflation. Inflation in this case being 3%. Now, currently inflation is a lot higher than 3%. Currently inflation is up there, 7% and above. But in this article, they're taking the historical rate of return in the stock market, which they say is 10%. I don't agree that it's 10%. Depending on which time frame you look at, it might be higher, it might be lower, but we're going to stick with that 10%. And then they're adjusting for inflation. So that 10% comes down to 7%, 3% being the number for inflation that they're using. We're going to pick on the 30-year mark because let's say you're in your 30s, you have a time span of 30 years to invest, and you want to retire at 60ish, 65. So 30 is probably the best one to look at. So according to them, this is the amount you need to invest in order to get that 2.2 mil. Now, let's double check that. Let's actually check and see if that lines up. So there's a specific site that I use, and I've known this website for decades. It's called Dinkytown. The cool thing about this website is that it has a plethora of different calculators that you can use if you want to calculate 401k. Excuse me, you want to do a savings calculator. Just check this website out, dinkytown.net. Even if you want to get to 1 million, they have a calculator which shows you how much you need to invest if you want to hit a cool mil. Don't see where it's at right now. Let's do investment. Let's do investment goal calculator. So we're going to plug in the same numbers from that article. So we're going to invest for 30 years. We're going to start with zero. We're going to invest 881 and 22 cents. And we're going to invest at a 7% rate of return yearly. So let's scroll down. So years to accumulate, we're going to do that 30. Initial investment amount. So we're starting at zero. Rate of return. So the article had 10% adjusted for inflation, 7%. So we're going to keep that. And periodic contribution, 1,000. So we're going to up that to, let me just copy this. Boom. There we go. Oh, crap. That didn't work. So let me just type that in. Let's see if that's correct. 881. Okay. And then contribution frequency, we can do per quarter, per year, but we're going to do per month. Compounding annually, perfect. So a 2.9 inflation rate, which is close to that 3%. Okay, so let's go ahead and hit calculate. So according to the numbers that we plugged in, after investing that amount on a monthly basis for 30 years, we're going to hit close to pretty much hitting that 2.2 mil. So the blue line is tax deferred, which means no taxes are taken out and then taxable. But like this one is already adjusted for inflation, so we're just looking at the blue line. So they're pretty spot on with their calculation. So let's keep going. So as it goes with any other investing calculation, the earlier you start investing, and thus the more time you give your investments to grow, the less time you have to commit each month, which is true. Someone who has 50 years to invest can contribute 12K less each month than someone who has only 10 years to invest. Yes, if you only have 10 years to invest, that's going to look bad. Because if you invest, you're going to have to invest at least close to 13K a month to hit that 2.2 mil. Now, how to start building wealth now? The above calculations may seem like a good news or bad news, depending on how much time you have to invest your cash. While we wanted to see what it would take to reach the benchmark of 2.2, blah, 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 blah. It's important to know that anyone can build wealth no matter when they start. And they don't need to be rich to do so, which I agree with. Now, many investing apps allow users to dip their toe into the market with fractional shares. Actually, I have a Robinhood account, and I did a video on it where I bought a fraction of the Apple share for $1. And even on that fraction, Apple is a company that pays out dividends. So I even get a fraction of that dividend based on the dollar that I bought Apple for, that fractional share. So they go in on a couple of different brokerage accounts. So Robinhood, Acorn, you can make regular investment contributions and have the spare change be extra investment money working in the background. Now, I don't agree with the spare change, using your spare change to invest, because honestly, spare change is not a lot of money. And if you start investing, yes, it's fine to start investing with a little bit of cash money, but you need to start investing a lot more if you want to progress faster. So investing with spare change, is that going to break the bank? Probably not. So they talk about Robin. So pretty much they want you to sign up, and if you sign up for one of these, they're probably affiliates, some money back, some cash back. So Robinhood, Acorn, what else is there? Wealthfront, Betterment. So I'm with brokerage accounts that I have. I have Robinhood, I have Ally, TD Ameritrade. I have them for different reasons. So I have my 401k, but I also have a Roth IRA. Then I also have a brokerage account. The one that I have with Robinhood is just a regular brokerage account. And then the one that I have with Ally, that's also a regular brokerage account. Most of my dividend stocks that I purchased are in my Ally account. Now let's see, we're almost at the end of the article anyway. So robo advisors. I've never messed with robo advisors. So Wealthfront and Betterment. If you guys have, just leave a comment in the comment section. If you've if you have any knowledge of one of these two, I've never messed with them. And then the bottom line, so the conclusion, it's interesting to see what it takes to reach the net worth that Americans consider wealthy, and that's 2.2 mil. The key takeaway, however, is that building wealth can be accessible to everyone, no matter what your net worth goal is. When getting started, know the timeline you have to invest, how much risk you can take on, and the amount of money you can contribute. So one thing this article did not go into, they did go into the 10% that they say that the market goes up with every year, or the average. So they did highlight here, the historical return of 10%, but they didn't go into detail on what you need to invest in, which specific stocks or index funds or mutual funds or even crypto. They didn't go that deep into what you actually want to invest in this particular article. So I'm pretty much thinking that with this article, they were probably talking about a index fund, like a S&P 500 index fund that tracks the S&P 500, which has according to them, historical 10% inflation rate. Not inflation rate, market. So this pretty good article. Let me switch this again. Yeah. So pretty good article. I'm a dividend. So the difference with me and somebody who would invest like this is that, let's say you have a 401k, and every single month money is taken out of your check in order to invest in, let's say, S&P 500 index fund. Now you can build up to that 2.2 million, but here's the issue. Once you hit that number and you start to live off that 4%, so in this case, it's going to be a little bit more than 50K on that 2.2 mil. You're selling off your investments and your assets to live off of it. As a dividend investor, I'm living off my dividend income. So I never have to sell my assets. I just hold on to my assets. Doesn't matter if the the value of the assets go up or down depending on how the stock market is trending. Currently, it looks like we're in a bear market, but the dividends that I do get, and I analyze these companies to make sure that these are companies that are able to pay their dividend and they're able to grow their dividends faster than inflation. So the companies that I do invest in from a dividend standpoint, I hold on to the asset. I never have to dip into my investment because I just live off the dividend income. So hope you guys like this article. And that 2.2 mil, that's a nice number. I mean, I wish I had that 2.2 mil now. But yeah, let me know what you thought of this article. If you agree with 2.2 mil, do you think it needs to be more? Do you think you need to have 3 million? Do you think you'll be fine with just 500K or maybe even 1 million? Just let me know. Let me know in the comment section. Hit the like button, subscribe. I'll talk to you guys in the next video. Cool, cool.